this one. Let's get out of there. Let's change that. Let's go here and let's go there. All right, we're ready. So now we're up to 6 cameras. All right, bloody jolly good. Here we go. Do you want to check Instagram? And then check YouTube. See how it's working. Oh, who do we have here? Let's go back a little bit. Hold on. Who do we have? Isra, Danish. Cool. New here. Never seen that name before. SWAT team. Travis. Mitchell Levine.
That's Instagram.
Yay, Instagram's working.
Is that from your computer or from
That's
phone?
probably from my phone. Okay, hold. Put it up again. Second. Hold on. Which one is it? Okay, so that's the phone. It's not the computer.
Okay.
Okay, now check the YouTube. Jeff, I gotta go back. Lloyd, Sal, Broccoli Head. What the hell kind of a name is Broccoli? What kind of a name is Broccoli Head? That's an interesting one. But okay, it is what it is.
10-minute trader YouTube is coming from the computer.
Okay, all right, so yeah, there's 2 YouTubes. Okay, the computer, which is just the screen. And now check the other 10-minute trader. It should be me standing in front of the screen.
Okay, and that should be the 10-minute trader, or is it James Gudino?
It should be the10minutetrader.com on YouTube. There should be 2 lives there. Live. Okay, let's keep on looking at this. Broccoli Head. Vinny, Pacino, Lloyd, Chris, Bounce, Tyler, Q, Blind Guy.
So
See you, Blind Guy. Okay, Randall Ray. How are you? Juan Rivera. How you doing? Jeff. All right, hold on. What do we got? Randall Ray, got that one. Mitchell. Merry Christmas, Randall, and you too. If a 4. Royal Kings. Richard, how are you, Richard? Savage, Todd, Jerry. Oh, you guys. Hey there, hi there, ho there. We only had 31 people. That's horrible. Jeff Copeland, how are you? All right, anyway. My name is James. This is Dividend Stock Talk. How do I feel about the stock Lode? L-O-D-E. Never heard of it. Well, let's pull it on up. L-O-D-E. Lode. Like that's a load of what? Okay. 2 things. All right. Who asked me about Lode? All right. Katie. Dear. Really. Honestly. 100%. Not sure what you're thinking here. When the show says Dividend Stock Talk, investing in dividend stocks for weekly cash flow, and you're showing me a company that has monthly options, number 1, that's a no. Number 2, they're not even $1. How can this company have 20 years of increased dividends if they're not even at $1 yet? So I'm just going to say, no. Load is load up now. Sup? What's happening? Misty, how are you doing? Okay, Mike, how you doing? Jay, who else thinks bears are just accumulating for years, for the year to come? Don't know. Thoughts on Ford? I like Ford. I do. Let's take a look at Ford. Ford had a down day today. So hold on a second. Hold on. Let's take a good look at Ford and see what it looks like. Now, I did look at it first thing this morning. What? Neo Crazy Boy 97. What? I have no idea what you're talking about, but okay. No. All right. So, Ford. The high of the year. The low of the year. Where was it? Where is it? Look at the movement. Sideways, up, down, sideways again. And now we're here. We had a big down day today with Ford. Let's zoom in and take a closer look. Can you see me? No, I cannot see you. I can see what you're saying, and that's about it. All right. Look at the last 90 days for Ford. Look at that beautiful movement. Now, you may not think that's beautiful, but to me it is. Annie, thank you. How are you? Wonderful, wonderful. Down, up, down, up, down, up. Beautiful movement, but look at right here. What happened here? Well, let's zoom in a little closer and take a tighter look. All right, last 30 days, right there. 30 days ago was the 30-day high. And then this bad boy just dropped, and dropped again. I don't know what you are talking about, but keep talking. Neo Crazy Boy, how are you doing? We're talking about investing in dividend stocks for weekly cash flow. A safe, predictable, consistent 1% per week is what I'm looking for. Now, at some point in time, you may have not thought of this yet, but at some point, you are going to retire. Your money has to go somewhere. So, are you okay with giving it to someone else and saying, all right, here's my money, you do what you think is right, and let me know what you think I deserve back from my money? It's weird, but that's how it is. So I like to think that most people have more interest in their own personal money than most. Maybe, okay, maybe. No, no, no. Everybody retires at some point in time. Either that, you die on your way home from work, or your way to work, okay? Now, I know a few people personally that died on their way to work, all right? Well, that's gotta suck, okay? My best friend, who was one of my groomsmen at my wedding, his younger brother walked out of the house, got halfway down the walkway, and just dropped dead on his way to work. Yeah, so you're gonna, at some point in time, retire, and your money has to come from somewhere. If you're relying solely on Social Security, more power to you. Anyway, I wish you luck with that one. But here's the thing. Let's get moving. So we're looking at Ford, okay? 30 days ago, here's the high. Here's the bottom right there. I am fine in that. How are you? Here's the bottom right here. Wednesday, 2 weeks ago. So we had a down day today. Thanks, you're welcome. Okay, so we had nice movement all last week. Look, Friday was the up day. Monday, Tuesday, Thursday, Friday, nice upward movement. So what the hell happened today? What is that? All right, well, we're at 988 at the moment. So what am I looking for? I'm looking to buy it at the current price, 990. I'm selling the 10s. It's only going for 6 cents to 7 cents, not quite 1%, not quite what I'm looking for. I'm looking for a simple, safe, predictable, and consistent 1% per week. The only way I can get that is by a weekly option, okay, on a dividend stock. Now, the reason why I like dividend stocks is because they share their profits with the investors. I am an investor. If you're here, my assumption is you're an investor also. So if you want to figure out where your money's going to go, hey, it's just an idea. This is just what I do. I'm not giving advice to anyone. I'm just showing you what I do. I get a simple, safe, predictable 1% every week. Now, for those who don't know, might be new here, let's go take a look at the trades that I have done throughout the year. Now, I post all my trades every week. All right, so here it is, week 38, the 12th week of the third quarter. Slide down a little bit more. Week 22, 9th week of the second quarter. There's 4 quarters in the year. January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. We are officially in week number 52 for the year. Week number 13 for the fourth quarter. So tomorrow is the last trading day of the year, which means it's the last trading day of the fourth quarter. It's the last trading day of the 13th week of the fourth quarter, also known as week number 52 for the year. So Thursday is day number 1, week number 1 of 2025. Well, that's when we start looking at the list of the week number 1 for the first quarter. That's what we start looking at. And where do I find those? I find those right about here. Okay, here we go. Week number 1. Okay, that's 2024. Let's go to 2025. Whoops. All right, here we go. Week number 25. Here we are. So tomorrow is Tuesday. Okay, let me read some of these names to you, and you let me know if it makes sense or not. AGNC, John Deere, Humana, Line, Mendelez, Annaly, Nucor, and U.S. Bank. What do we have here on Friday? We have American Express, Bristol Myers Squibb, Cisco with a C, and Cisco with an S. That's weird. Cisco and Cisco are having their dividend on the 3rd, Friday the 3rd. And we have NTAP. Okay. That's this week. Look what we have coming up next week. JP Morgan, Comcast, MasterCard, Oracle, Marvel, AT&T, Verizon. That's next week. Then the week after, then the week after. These are the companies that I look for. Each and every one you probably heard of. Okay, everybody's heard of Ford. We just looked at Ford. Ford doesn't look that great today. What am I looking for? A good quality company. What do I consider a good quality company? 20 years, that's 2 decades of increased dividends to the shareholders. And that's us. When we buy and sell stocks, we become the investors. We become the shareholders. We own a portion of the company. We are entitled to a portion of the profits. So why dividend stocks? Why specifically dividend stocks that have consistently increased their profits? Well, call me crazy, but if I'm going to invest my money, now I've been working since 1973, Old Man Simmons Farm, right on South River Street, picking tomatoes, lugging firewood, doing green beans, taking care of the chickens, crap like that. Old Man Simmons Farm, 1973, my first job. Okay, I've been working since then. So the money I have accumulated has to last me for the rest of my life and pay my bills on a weekly basis. So how do I do that? Well, I take it, I invest it into a good quality company, one that has at least 2 decades of consistently increasing profits. That means year after year after year, their profits get higher and higher and higher. Now, to me, that just makes sense. Now, we looked the other day, there's 9,817 different companies that you can invest in at any time you want. Anytime. 9,817. That's a lot to go through on a daily basis. Me, I just look at the ones that are consistently profitable. Dividend Kings. 54 companies that have increased their dividends for more than 5 decades. Dividend Aristocrats. 67 companies that have consistently increased their dividends to their shareholders for 25 years or more. Dividend Champions. 25 years of increased dividends, 150 companies. Their rules are a little bit different than the Aristocrats, but still 25 years of increased dividends. Coming up at the end, we got the Dividend Contenders. 10 years to 24 years of increased dividends. Now, a dividend, if you didn't know, is a portion of the corporation's profits that they give back to the investors. And that's us. We're the investors. We're here to make money. We're not here to make friends. We're not here to have pen pals. We're not here to, to change recipes or anything like that. We're here to see how to make money simply, safely, predictably, consistently, all that kind of nice, neat, fun stuff. Okay? I don't want to put my money at risk. I don't know how you guys feel, but here's the thing. If you're looking for capital appreciation, that means you want to buy a stock and have it just shoot on up, you're in the wrong place. That's not what I'm looking for. I'm not looking for the next Netflix. I'm not looking for the next Amazon. I'm not looking for the next Tesla, where you buy it here and it shoots up. Nope, that's not what I'm looking for. Yeah, that does happen. Yeah, if you're looking for that, you probably should look somewhere else because you ain't going to find it here. Okay? Not what I'm looking at. I'm looking at safety, predictability, and consistency. Okay, so when you get to the point where you're retired and you have to have a steady income, you got a couple of choices. Do it yourself, take accountability for your own money, or hand it off to a financial advisor, money manager, or some kind of fund. Basically, you're giving it to a computer and the computer's going to do it for you. Don't get me started on those ETFs. They're electronically traded funds. That means you're handing your money over to a computer and the computer's going to do it for you. Nothing wrong with it. It just doesn't work for me. Okay, anything I do, I'm old school. I write shit down. I do. I don't trust computers as far as I can throw them. Okay? At some point in time, don't be surprised if the electricity goes out, internet goes down, and you can't figure out what end is what. Well, that's why I write shit down, because eventually, don't kid yourself, it might be a problem. Now, I remember when the hurricane came through, we lost electricity for 3 days. No water, no electricity, no cable, no internet, no telephone. 3 days in the dark. Okay, it didn't bother me a bit. You know, I'm Gen X. We can do anything. All right? But here's the thing. I couldn't access my accounts. I lost $2,500 that week because I couldn't get a trade in, because as I'm driving up and down the street, okay, driving up and down the main street looking for internet access, I found it. I got 3 trades in. I couldn't get the 4th one in. Ended up losing $2,500. Okay, didn't make me happy, but it did allow me to elaborate part of the story. Okay, if you don't keep your eye on your accounts and you don't have access, you could lose money. Okay. Now, I could say that, you know, and not have any conviction behind my voice, but really, I did. I lost $2,500 because I couldn't get a trade in. When the hurricane came through St. Petersburg, that was a couple of months ago. I don't know if you guys remember it or not. What's a good dividend stock to keep long term? I know it's not your method. Okay, Sean, my idea of long term is 30 days. Okay, so if you want a company that you can invest in for 30 days, that's my idea of long term. 30 days. Simone is in the house. Woohoo! Tony, how you doing? What are blue triangles on the bottom of the chart? Well, now that's an interesting question. Alrighty, so I'm looking at my chart and I'm not seeing any blue triangles. But hold on, let me go to another chart and see if it's there. Okay, so I have one chart here, no blue triangles. I got another chart over here, no blue triangles. I must be missing something, because I don't see the blue triangles you're talking about. Sorry, Tony. Rest in peace, U.S. young people. No Social Security for us. Don't get me started. How about DPZ? Never a good thing when somebody asks me to take a look at something and I say, what the heck is that? Sean, why can't you make a recommendation anyway? You have a lot of knowledge. Sean, I have a shit ton of knowledge. But here's the thing, Sean. Number one, I have no idea who you are. I have no idea how old you are. I have no idea what your risk factors are. I have no idea what your plans, dreams, aspirations are. I have no idea what your commitment level is. If you just want a stock to dump money into and just say, oh, I'll see you around in about 5 or 10 years, yeah, I can't help you out with that. Because that's not my expertise. That's not what I'm looking for. I'm not looking to drop my child off and come back in 10 years and say, hey, you did a pretty good job. No, I'm not looking for that. Okay? Sorry. There are plenty other websites out there that will be able to help you out there. I bought 1,000 shares of your sweaty chest hair. That's a horrible thing to say. But okay, thank you for that. Anyway, I don't see any blue things. All right, so, hey, James, can you show one of your positions you took today, step by step, and the potential risk? Okay, well, let me look at DPZ first. And as I was saying, it's never a good thing to DPZ, to give me a stock to take a look at, and for me to say, what the hell is that? Domino's Pizza. Okay. First thing I want to do is I want to go to Yahoo Finance and take a look at how often does Domino's Pizza actually increase their dividends, and do they even have dividends? Because I don't invest in Domino's Pizza, and there's probably a reason why. Okay, so here it is right here. $420 a share for Domino's Pizza. Okay, now over here in the bottom left-hand corner, okay, has all the statistics that I'm looking for. The summary, the news, research, chat, historical data, statistics, you know, stuff like that. Weird stuff. All right. So I'm going to take a look at the historical prices. Okay, Big Meech, is that tea? Yes, it is. It's ginger tea with honey. I'm not used to talking so much, and it's good for my throat. Okay, dividend only. Okay. Now, I want to take a look at all the dividends, every single dividend that Domino's has paid, and I want to see how well they have increased or decreased it. Okay, so we're going all the way back to 2004. John, you want to take a look at Clorox? Hold up. We'll take a look at Clorox, CLX. I'll write it down. There's no guarantee we'll get to it because we have a lot to go through. KG, thank you for that. Are you investments primarily in dividend-paying stocks? Yes. That's what I like. I like dividend-paying stocks because they're consistent, they're predictable, and for me, they give me 1% every week, and that's what I'm looking for. You know, 1% a week doesn't sound like a lot, but that's 50% per year. And I can live very comfortably off of 50% of my account. What are my thoughts on BCE? Okay, here's my thought. You ready? What the heck is BCE? I'll take a look. BCE. All right, we'll take a look at it in a minute. Hold up. Right now we're looking at how well Domino's Pizza pays their dividends. All right. So, 2004 it was 7 cents. 2005 it was 10. Then it went to 12. Then it went to 20. Then 25. Then 31. I like the way it consistently increases. I like that. All right, Canadian Telecom, if it's traded on the U.S. stock market, yes. If it's not, then no. Okay, CH? 31, 38, 46, 55, 65, 78, 94. I like the way it keeps going up. 110, 121, 151. Nice. So what am I missing here? Oh, I know what I'm missing. The fact that it's $400 a share. It's traded on the U.S. Stock Exchange. Okay, we'll take a look at it. Okay, so lead sponge, Domino's Pizza. They consistently increase. Did you see that? They consistently increase their dividends every single year. I like that. I'm going to put that down. DPZ. DPZ. All right. Now, let's go and take a look at the numbers for DPZ. Well, here's the high right here, 540. Here's the low last year, okay, just under 400. Ooh, I like Dell. Your screen is white. Yeah, my screen, okay, this one here is live on YouTube. And yes, as soon as I figure out how to use the night mode on Yahoo Finance, I will. You can see it now? Well, yeah, because Thinkorswim, I have the ability to use night mode, which makes it a darker background. But Yahoo Finance, I have no idea how to use the dark amount. Can you take a look at JBH? Yeah, hold on a second. I'll write it down. JBH. Okay, I wrote it down. Hold up. So, Domino's Pizza. A year ago, we were at 409. The bottom of the year, 394. Now, that was back in early January. Okay, from there, the end of April, well, there's our top, 541. That's probably why I don't invest it. I stay away from stocks this high, but that's just me. So however much money you think I have, I don't. Okay, I cannot afford $400 a share stock because I like to buy, 1,000, 2,000 shares at a time. 1,000 shares at $400, that's like 400 grand. Yeah. All right, anyway. The high, 540. Okay, she had a big drop here in mid-July. Okay, last 90 days. Okay, I'm looking for 5 things anytime I look in a chart. Whether it's a 1-year chart, a 90-day chart, 30-day chart, 5-day chart. 5 things I'm looking for. Number 1, high. Number 2, where's the low? Number 3, where was it? Number 4, where is it? Number 5, you take your little finger and you go like this. It's really not that difficult. Down, up, down, up, down, up, down. Okay, so right here, it makes me a little uncomfortable because lately, Friday and today, we're having a lot of down movements. All right. So here's our high, 479. Here's our low at 408. Okay, so last 30 days. Okay, 30 days ago was our 30-day high. You have your profit taking, because what happens when you have a 30-day high? You got guys like me say, hey, I'm going to take my profits before they disappear. Well, you take your profits and the stock drops. What happens when it gets down to here, the 30-day bottom? Well, you got guys like me and some of you in the audience say, wait a second, Domino's Pizza at 400? Yeah, I'm going to buy some. And then the stock goes back up again. And then the whole thing starts over again. Stocks go up, stocks go down, stocks go up, stocks go down. If you're expecting them to come to your house, take the dog out for a walk, you're sadly mistaken. They go up, they go down, and that's it. It stands for James Bell Hair. Okay, yep, people, whoops, what was that question? People are punching out at the peaks. That's right. I mean, think about it. What is the purpose of investing? Well, the purpose of investing is to make money. So if you buy it when it's low, okay, and then she goes up, well, it's not a profit until you take it. Okay, does that make sense? It's not a profit until you take it. And nobody ever went broke taking profits. Okay, so user 5370799488913 wants to take a look at a trade that I did today. Well, step by step and the potential risk, profit. Okay, it's not a loss till you sell it. Bulldog, you're absolutely right. But if you've been here, can I ask you a question? I need advice in it. It depends on the question, of course, because my expertise is limited. All right? All right, here we go. That is the best thing to get across, is to take profits while they are there and get back in when the price hits the floor. Yeah, I think that's kind of like what I said. You buy low, you sell high. Okay, I have not yet, until this day, have not heard anyone say, hey, look at this stock. It's at an all-time high. Let's buy it. I've never heard that. I mean, you guys out here ask me, what do I think? I think, well, it's at a high. Why the hell would I want to buy it at the high? Okay, I don't. I want to sell at the high and buy when it's low. Well, how do you figure that out? Well, that's all stocks do. They go up and then they go down. Nick Bully. Why did my girlfriend dump me because I said 10-minute trader is gay and an old loser? Well, maybe you deserve to be dumped for saying something like that. Okay? Number one, I'm not gay. Okay? I may come across that way.
I'm happy.
I got a grandson, and I have a few other choice words that I'm not going to say. That BCE is at a 52-week low. Okay, hold on. I have BCE written down. We'll get to it. Right now, we're still looking at Domino's Pizza. All right. So Domino's Pizza at this moment in time had a big drop today. So I'm going to say no to that one. I'm curious. Will it go lower? It always could. Thanks, Nick. Nick, I feel better about myself. I appreciate it. All right, Nick. I think enough's enough. All right, here we go. All right. Dun, 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 dun. Here we go. Ball here. I have no idea what that means. Ball here. Anyway, let's get rid of him. All right, deleted, trolling. Yeah. There's a lot of trolls. You know what they say? If you don't have enough haters, you're just not working hard enough. So I appreciate it. I love it. I would appreciate it more if they actually stuck around and put up a halfway decent fight, other than just hiding behind their keyboard saying, you suck, you're gay, you know, all that kind of nice shit. Fine, you got something good to say? Say it. Let's go back and forth. Have it. I'm selling calls on CELH. CELH. But it does. It peeves me. You got something to say? Fine, say it. You want me to rebuttal? Fine, I will. However, stick around and stand your ground and have something worthy to back it up other than just, bickering crappy words. Okay, anyway, let's get back to this one. Now, normally, I like the movement. The 30-day bottom was Monday. Okay, 2 days. That's what I'm looking for. But Friday was a down day, and today was a down day. So, sorry, no Domino's pizza this week. No pizza for you. All right, so he wants to take a look at one of the trades I did today. Okay, what are we looking at? Ooh, I did some U.S. Steel today. Let's take a look at some U.S. Steel. Okay. Now, he wanted to see U.S. Steel. Okay, I'm going to show you. Who is it? Doesn't even give me a name. CH. I've been watching okay. Hey, how are you doing today? I'm doing great today. Okay, but we'll take a look at CELH in a little bit. Nucor, we looked at Nucor this morning. NUE. Give me a few minutes. I'm trying to get caught up here. So somebody wanted to take a look at a trade that I did today and explain the possible risk and possible reward ratio. All right, great. X, not Twitter, okay, not SpaceX, X, U.S. Steel, okay? Now, if you know anything about U.S. Steel, it was started by Dale Carnegie back in the 1800s. Guy was freaking massively rich, okay? Gave away all his money before he died, all right? So, U.S. Steel at this moment in time is currently 31.37. Okay, what is the risk with U.S. Steel? Well, it's the same with any stock. Any stock, okay, can go up, can go down. As a matter of fact, that's what they do. Look, a year ago, U.S. Steel was at 49. Drops down here to 38, shoots up to 42, drops down to 36, shoots up to 42, drops down to 28, shoots up to 44. Now we're sitting at 31. Well, that's what stocks do. If you're getting into this game and thinking that you're going to buy something and it's not going to go down, you're sadly mistaken. Okay, the high and the low on almost any and every stock can be as high as 80 to 90%. Okay, that's huge. Okay, the high, 49. The low, 28. 28 to 49, that is 19 bucks. Okay, that's a 50% drop. But go the other way. From 28 to 44. 28 to 44, that's almost 100% increase. So it all depends on how you're looking at it. All right, so let's keep on going. So I like U.S. Steel. All right. The high is how many times I think that. Oh, thank you for that. Okay, so the high is here. Okay, see, she's going sideways for a couple of months. Okay, was that December, January, February, right into March, and then she drops down to a trading range. Look at this trading range from March all the way until the beginning of December. It stays between 36 and 40. All right, that's a nice trading range. Okay, so that being said, let's take a look at the last 90 days. Okay, so the last 90 days, remember, I'm looking for 5 things. Here's the high, here's the low, here's where it was, here's where it is. That's why I'm selling calls. Daryl, that's the exact, Diamond, what the hell name was that? That was kind of quick. Kind of quick. That's why I'm selling calls. Dylan, cool. X price target 42.11. Well, cool. Kind of right up my alley. I think I jumped in at 41, but I also dollar cost average down. So anyway, I did a trade this morning. Let me explain it to you. Okay, here's the high, here's the low, where it was, where it is, where it's going up, down, up, down. Now she's going back up again. All right, great. Well, why do I like U.S. Steel? Well, number one, it's U.S. Steel. It's got name recognition written all over it. All right. Number two, I like that X chart. Good buy, sell action. Yeah, you're absolutely right. It does have good buy, sell action. But what am I looking for? I'm looking for an opportunity. Well, U.S. Steel, okay, the high is here. The low is here. Okay, you're going to hear this over and over and over again. You make money in the stock market by, you ready? Buy low, sell high. So the low of the 90-day period is right here. Okay, that was last week. Okay, so what's going to happen at the low? What usually happens at a low? People start buying and then it goes up. Well, that's what I'm looking for. But take a look at the trade that I did. Now, I told you I jumped in at 41. Okay, now I'm not kidding, I did. I jumped in at 41, way up here. And then she dropped all the way down here. Am I panicking? No. Do you know why I'm not panicking? Let's take a look at the numbers. Now, that's where I jumped in before. Where is my trade for U.S. Steel? All right, here's one right here, U.S. Steel. All right. 3,200 shares at 41. Okay, 41.25 to be exact. All right. Now, the stock is currently at 31. Okay, I bought it at 41, way the hell up here. Okay, now it's all the way down here at 31. So if you take a closer look, well, I sold the 34 calls. What does that mean? Well, I'm giving, or I didn't give it, I sold it. I sold somebody the rights to buy all of my stocks from me at $34 a share. Why would I do that? Well, if I bought it at 41, does it make sense to sell somebody the option at 34? Well, kinda yes, kinda no. Well, what's going to happen? Well, the option, the call option, or I like to call it is a covered call, covered because I already own the share, which means I can sell the options against them. Amazon, hell no. Okay, Caleb, Dividend Stock Talk is the name of the show you just entered. The key word being dividend. Amazon doesn't have dividends, so Amazon is right from the beginning a no. Susan Ann, how are you today over on Facebook? All right, so why did I sell it at 34? Well, the stock is in a dropping session at the moment and is slightly going down. Is it going to continue to go down? No, it's going to get to a point where it's going to stop, turn around, go back up. But here's the thing. Whoever bought this 34 option, they paid me $1.59 per share. So let's do a little bit of fancy math real quick, all right? So if I have 3,200 shares, let's bring up my calculator. Okay, let's clear that. 3,200 shares. Okay, see? 3,200 shares. Okay, and you saw the trade. Here's the trade right here again. View trades. All right, here's the trade again right here. 3,100 and then another 100 at 41.25. That's my purchase price. That's what it cost me. All right. Now I turned around. See the date right there, the 26th? That was just the other day. Okay. I sold January 3rd, which is this coming Friday, $34 call strike, which means whoever bought it can do whatever they want to the stock if it is over $34. Well, currently it's at 31. Okay? What are the odds of it going over 34? Well, they're there. We got tomorrow, which is Tuesday, no trading on Wednesday, then we have Thursday, and then we have Friday. So I have 3 days for this thing to go up $34 or higher before I would lose any money. Well, I've been doing this long enough, I know, well, I have a good feeling. Let's call that, I have a good feeling that this thing is not going to go over 34 by Friday, which means this option here will expire worthless. Now, think about that for a second. Whoever bought it paid $1.59 per share. They're under the assumption that it will go over 134. But how far above 134 does it got to go for them to actually be profitable? Well, you take the 34 call and you add the 159. So for whoever bought this option from me, the stock has to hit 35.59 before they can even see 1 penny of a profit. So even if it hits 35, more than likely they're not going to take it from me because they're losing money. All right, so anyway, let's get back to where we were. So I sold the 34 call, 159 per share. How much is that? Well, calculator, 3,200 shares. Can you sell for less and just take some loss? No, hell no. Annie, I'm going to pretend you didn't say that. Okay, I got 5 simple rules. 5. That's it, just 5. You ready? Never buy something you do not want to hold on to for the rest of your life. That means if you don't like it, don't buy it. If you don't know what they do, don't buy it. If you don't know the numbers, you don't know anything about it, don't buy it. That's rule number 1. Never buy something you don't understand. 2, this is the big one. You ready? Never sell at a loss. It defeats the purpose of the whole game. And don't kid yourself, it is a game. Just like Monopoly, but it's real money. Okay. Rule number 3, make sure the company's consistently profitable. Okay. Rule number 4, weekly options only. When I say I want weekly cash flow, the only way I'm going to get weekly cash flow is through companies that offer weekly options, or, because there is an alternative, me sitting in front of my computer every single day looking for certain setups that I can trade on a daily basis. Yeah, no thank you. All right, I like watching the grass grow more than I like sitting in front of the computer. And you know how slow and boring that is. But funny story. One day last year, it was one of my best days ever. Really, you have one of those days you think, oh, that was an awesome day. I was sitting in a nice little comfortable chair, having a nice little cocktail, sitting and watching for 3 hours. I actually sat on my butt for 3 hours, watched a chipmunk climb up a tree, come down the tree with a walnut in his hand, and scurry off out. 2 seconds later, he comes back, goes up the tree, gets a walnut, come down the tree. And if you're curious, it's a black walnut tree, these big, huge black walnuts. Okay? Climbs up the tree, grabs a walnut, comes down the tree, scurries off. I sat there for 3 hours and watched that guy do that. I prefer doing that than sitting in front of my computer making money. At some point in time, you are going to make the same decision. What do I prefer to do? I don't want to sit in front of the computer. All right, so let's take a look. What did I actually get this week from this one trade? All right, so I already told you it was, how much was it per share? 129, 179, something like that. 159 per share. Okay, so 159 per share. So 3,200 shares, 159 per share. You ready? Multiply that times 1.59. Now, just this morning, $5,000 for that one trade. Well, I'm looking to make 1% a week. Now, 1% a week, now this account only has 130,000 in it. But 5% on one trade, yeah, that was a freaking nice, sweet trade. Really, it was. But here's the thing, okay? I bought it at 41. Let's open this up a little bit more. Okay, I bought it at 41, which is way up here, all right? Right now, it's down here at 31. Okay, today's Monday. Now, I'm under the assumption, I'm under the belief that this thing is not going to hit 34 by Friday. And that's why I did that particular trade. Okay? It's simple, it's safe, it's predictable. Now, if I felt it was going to see, Friday was a down day, Thursday was a down day, and today was a down day. If they were up days, then I would not have sold at 34. I would have sold at 35, 36 to 37. Okay? My number one goal is safety. Okay? I don't want to have to go back to work again. I'll tell you another cute little story. Not cute, a little disappointing. Okay? Now, last year I bought a 42-foot boat because me and my girlfriend at the time were going to jump on the boat and we were going to go down to the Caribbean and just do nothing all winter long. Great. Got a phone call, the doc said, you got a brain tumor, so she can't go, all right? So I'm back in the boat, try and prep it to sell it because there's no sense keeping it. All right. So as I'm going to the boat, I'm fueling up my van, and there's a guy, sharp dressed, looking real spiffy, looked like a tuxedo, but he worked at a resort because he had the name tag there and they had the name of the resort. I said, "You're looking spiffy there, dude. You going to work?" He says, "Yep." I said, "How old are you?" 84 years old. Going to work. I said, "Oh, getting out of the house, going to work because you got to get out of the house, get away from wife." He says, "No, I got to go to work. I got all these bills to pay." I said, "Hold on a second. You're 84 years old and you have to go to work to pay your bills?" And I thought to myself, "Oh, hell no, I do not want to be in that situation." All right, I do not want to be 84 years old and have to go to work just to pay the bills. No, it's not worth it. If you don't take care of your money, if you don't take responsibility for it, well, then you're going to have to rely on someone else to do it for you. And if you're going to do that, there's nothing wrong with it. I mean, if you have enough money to do that, fine. But I don't. I don't have that kind of money. Because right now, what are they offering? 4%, 5% yield? Okay, if you give your money to a money manager and say, "Hey, okay, this is what we can do for you. Get a 4% draw every year," that should give you enough. Hell no, not for me. Okay, I need more than that. I would still be working if I didn't figure this out. Okay, now this I figured out in 2008. Okay, didn't really realize what it was. Let me tell you how the story came about. And I actually need, what do you call that? I need visuals. Okay, so here's the visual. You ready? Here's YouTube. Hey, look at this. We have 2 live shows. Yay! I want to go to my videos. I want to show you an old video that I did a long time ago. All right, and it comes down to the story.
Hi, I'm Tracy, and me, as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and arbitrage.
This is my favorite part. It makes me laugh every time I see it. Look how young I am. Look at all the hair. There's no gray. Here it is. Every time I see that, I crack up. But here's the thing. I've been saying the exact same thing since I did this video with my daughter. That's when she was 11. I first taught her when she was 9. When she was 9 in 2008, she jumped on my lap and said, "Daddy, can you teach me what you're doing? I want to do it too." Now, here's the thing. How do you teach a 9-year-old how to trade? It's not easy. A lot of adults still haven't figured it out. Okay? So, it had to be simple. She's 9 years old. Now, I love her dearly, but she's not a Mensa student. Okay? She's not an honor student. She's just a regular, everyday girl. All right? Had to be simple. It had to be safe, predictable, consistent, and here's the big one. No way for her to lose. Okay? So we came up with 5 simple rules. Rule number 1. This one is a little bit different. Okay? If it's not on the list, then it's a no. What's my list? Well, my list is Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Okay, those 5 lists, that's about 300 companies. Each one of those companies I just told you has consistently increased their dividends for more than 2 decades. Now, I told you earlier, okay, you don't believe me, let's go check. I'm here all night, no big hurry. Let's go to FinViz, Financial Visualization Website. Cool website, by the way. I like certain things, I dislike other things. Okay, and I'm going to show them to you in a second. Okay, here it is right here. FinViz, Financial Visualizations, gives you a lot of detail about all the different companies, okay, in the stock market. Okay, let's get rid of that. This is what I want to look at. You ready? This number, very important. 9,828. Now, didn't I just say a little while ago it was 9,817? Well, in the last 3 days, they added another 11 companies. So now it's 9,828 companies that you can invest in, any one of them. So which ones do you pick? Me, I want those that actually share their profits. Me, I want the ones that I can consistently make a decent profit every single week. So I'm looking for consistency and profitability. Well, then I'm looking for weekly options. Because weekly options allows me to get a weekly cash flow from the stocks I'm looking at. Okay, so now I have to change it. It's 9,828 companies. So, 5 rules. If it's not on the list, no. That's it. These are the only ones you're looking at today. That's what I tell her. Okay? You look at every single one. Okay? Look at every single one. And it's easy. Okay? Certain things we're looking for. Do they have options? Weekly options? Are they consistently profitable? Are they on the list? If they're not on the list, don't even bother. Okay? This is the only ones you look at. You don't look at these, you don't look at those, you don't look at those, you don't look at those. Now the reason being, these little green dots, those are EX dividend dates. What does that mean? There's only 4 dates to remember when it comes to dividend stocks. And the reason why I only like dividend stocks is because, number one, they share their profits. They're generous. They give me some money every single week. Well, dividend stocks, it's every month or every 90 days or however they pay their dividends. Now, they pay their dividends in this manner. Are you ready? Once a year, twice a year, 4 times a year, otherwise known as quarterly, every quarter, or once a month. So, I have no idea when these people are paying out their dividends. Do they do it once a year, twice a year, 4 times a year, or every month? I don't know. Don't really care. If they're on my list, I'm going to take a look at them. Now, the reason why, just before the EX date, just before the dividend is paid, the stock has a tendency, are you ready? Has a tendency to go up in value. So if the stock goes up in value, well, that's a very important piece of information to know. Because most of the time, stocks only move for 2 reasons. 2. Only 2. Don't kid yourself that there's more, but there's only 2. One is an unknown reason. I mean, it goes up, goes down. We have no reason why. There's a reason, but we just don't know what it is. Second is a known reason. Something we can set the calendar by. We can set our watch by it. Dividends, earnings, splits, quarterly reports, seasonality. That is a known factor. What seasonality, you may ask? Seasonality is, winter, spring, summer, fall. Certain things happen throughout the year, predictably, consistently. Okay? November, December, January, it gets cold. People turn the heater on. It affects the bottom line of the company. June, July, August, September, it's freaking hot. People put on the air conditioner. It affects the bottom line. Okay, spring, maybe there's some raw materials that are easily accessible. Or how about fall, during harvest time? Some companies needed products that are only available in the fall. Seasonality is something you can plan for. Okay, I will show you a seasonality chart a little bit later, but here's the thing. You either know the stock is going to go over or you're going to guess. Okay, what are unknown reasons? An unknown reason is natural disaster. Flood, tornado, hurricane, earthquake. Those are all unknown reasons. Do they happen? Yeah. Do they affect companies? Yes, they do. How about, do you remember the Exxon Valdez up in the Northwest? It crashed and all that oil spilled all over the place. What happened to Exxon stock? It dropped like a rock. But Exxon is a huge company. A couple of years later, they get a slap on the wrist, they pay a fine, and business back to usual. But the stock did drop. Same thing with British Petroleum when they sprung a leak in the Gulf. Their stock tanked. It got down to 54, and I took one look and I said, what are you kidding me? British Petroleum at 54? I'm going to buy a shitload of those. What happened? Slap on the wrist, they paid the fine. 6 months, 9 months later, they're back up to where they were before. Okay? An unknown reason. You cannot plan for them, you can only react to them. But a known reason, earnings reports, dividends. So earnings reports. I've seen positive earnings reports where stocks go down. I've seen negative earnings where stocks go up. So you really can't use those. They're not very predictable. You'd think that they are, but they're not. Dividends, however, they happen predictably every 90 days. For most of the stocks I look at, every 90 days, every time their dividends paid. And the thing is, the stocks have a tendency to increase in value just before the dividend date. So if I see the dividend date right here, MO, that's Altria. Okay, Altria is a dividend king. They have increased their dividends to their shareholders for more than 5 decades. They've been in business for over 100 years. Well, I like the company. Here's the dividend right here. December 24th, December 24th, the dividend was on the 26th. So if I was going to buy it, I'd buy it 2 weeks before on a Monday. Why? Well, if I buy it here, I have all week long to hit my 1% target. If I hit it, great, awesome, thank you. See you again in 90 days. What happens in 90 days? It's going to pay another dividend. All right, well, what happens if the stock goes down? Well, rule number 1, never buy something unless you plan on holding it until it hits your target. All right, so if I don't hit it the first week, I at least collect the 1% because I'm selling the premium. Okay, week number 2, do the exact same thing. Sell another premium, collect another 1%. If I hit my target, great. See you again in 90 days. Well, what happens if I don't hit it in the second week? Well, I don't care. It's Altria. I have no problem keeping on to it, holding on to it. So week number 3, I do it again. Get another 1%. 1%, 1%, 1%, and a dividend. Most people buy a stock and just collect the dividend 4 times a year, and they're happy with it. Fine. Not me. I want weekly cash flow. So Altria, I like the company. I'll check the numbers. Now, rule number 5, make sure all the numbers work. We're going to get to that in a little bit. I'm actually going to show you a couple of sample trades, and we'll go from there. Oh, so 1%, 1%, 1% dividend. What happens if here I still don't get my 1%? Well, I keep doing it every single week until it hits my target. Rule number 1, never buy something you do not understand or you do not want to hold on to or you cannot picture yourself holding on to it for the rest of your life. It's an investment in your future. If you do not like the company, you do not understand them, don't buy them. It's actually that easy. You don't like it, don't do it. Okay? Funny thing, here's another funny story. Okay? Now, everybody's had bad habits. Okay? My ex-wife, she smokes. Been smoking since we were together. Galaxy, how are you? But here's the thing. Everybody tries it. Okay? Now, I tried smoking when I was like 12 or 13. I took one drag, and I hacked up a lung, and I thought to myself, that's horrible. If you don't like it, don't do it. Why does the ex-wife do it? Well, apparently she liked it. I didn't, so I don't do it. It's so weird, isn't it? It's like drinking. I was a pretty damn good drinker when I was 16 and 17. And one night at a party on the beach, I drank a little too much. I wasn't very good at it, so I didn't do it anymore. Okay? So anyway, let's keep on going. Alrighty then. So, back to U.S. Steel. Okay, so I bought it at 41. I sold at 34s. I collected a nice fat premium for it. Is it going to hit 34? Probably not. So what am I going to do next week? Hello, Arsen Khan. Oh, cool. Arsen? Something like that. I got it. All right. More than likely, it's going to go probably end up around 32, maybe 32.50 or 33 by Friday if she turns around. If she doesn't turn around, she could keep going down a little further. Don't know. Do I care? Not really. Because U.S. Steel pays awesome premiums. Okay? I might just hold on to U.S. Steel all year long and just keep rolling it forward. What does that mean? Well, as the option's coming ready to expire, see, this one's going to expire this Friday. Okay, when Friday comes, I will take a look at a couple of factors. Number 1, what did I buy it at? 41 and then 41 and change. Okay, where's it at now? Well, right now, it's at 31. Okay, what's the value of my option? Well, I sold it at 159. Come Friday, it'll probably be worth like 20 cents, 30 cents, 40 cents, depending on where the stock is. Because as the time ticks away, Monday, Tuesday, Wednesday, Thursday, Friday afternoon at 3:59, this thing becomes worthless. Okay? So I will wait until Friday afternoon, like 2 o'clock, 3 o'clock, and I'll roll it forward into next week and pick up maybe another buck per share and pick up another couple of $1,000. Okay, that works for me. So what's the risk? The risk is U.S. Steel could fold tomorrow and go out of business, could file bankruptcy. That's the risk. What's the reward? Well, the reward at this moment in time is continuing to pick up a premium on a weekly basis on a company that I like. Now, you won't find me buying companies that you probably never heard of. Okay, so let's take a look at what I have in this account. Okay, CVS, I'm sure you've heard of CVS. Foot Locker, sure you heard of them. Halliburton, come on, everybody's from Halliburton. Kohl's, Riley, you probably don't know who Riley is, and Riot. Those probably you don't probably know those. But Walgreens and U.S. Steel, you probably know who those are. Blake Berry, dude, nice to see you again, dude. So I usually don't buy anything you probably never heard of. Now, Riley and Riot, those came up on my lap because another investor that I admire and I respect his decisions. I took a look at it, the numbers worked, and they just worked. All right, so anyway. But for the most part, yeah, I usually only do stocks that you probably heard of, household names. Okay, we all heard of Harley-Davidson. We've all heard of Home Depot, Lowe's, IBM, AT&T, Verizon, MasterCard, Visa. You've heard of all those. Those are the ones that I do. I don't do the weird shit you never heard of. Palantir, I don't do that one. NVIDIA, I don't do that one either. You need to check the numbers. All right, so, holy shit, I got 72 questions. Let's roll on through. So hopefully, user 5370794888913. Hopefully that answered your question. Big Meech, yeah, it's tea. All right, you want to know if I was drinking tea. All right, now, let me say this, okay? All right. Okay, let me say this before I continue. Now, if you have a question, if you want me to take a look at something, please only enter it once, okay? I will get to every single question before the night is over, all right? All right, Ford, RCAT. Stripe, RCAT, never heard of it. RCAT. This is probably why you never heard of it, okay? A year ago, actually in June, we're at $1. Now we're at 14. Okay, fine, dandy. But here's the thing. How often does something like that happen? Okay, seriously, think about it. Happy Premium Monday, 1.8%. Cool beans, good for you. How often does this happen? Hardly ever. Every once in a while, you will come across a stock. You buy it for $1 and it shoots on up. Yeah, that's speculating. That's not consistency. That's not predictability. That's not safety, at least not in my book. So let's go to Yahoo Finance and see how wonderful this RCAT possibly is. RCAT. Now, if somebody knows how to do the night vision for Yahoo Finance, let me know, and then it will change the whole thing. But until then, you got to deal with the brightness here. Okay, this is probably why I've never heard of RCAT before. Okay, can you repeat this with me? There are no dividends at this moment in time. No dividends, no thank you. Okay, it's a simple way for me to find out whether or not the company is profitable or not. Now, Misty, I'm glad you're doing good. Now, think about it this way. If they're consistently profitable and a dividend is a portion of the profits, okay? If the dividend is a portion of the profits they give back to you and me, the investors, and that keeps going up, well, they got to keep being profitable. Now, if the dividend keeps going up, there's no way the dividend can go up unless they're continuously profitable. So I have two choices. I could read all the we call them annual reports, quarterly reports. I could read all those. Have fun. 300 companies? Yeah, no thank you. I just assume go take a look at the dividends. Are they increasing? Better yet, there's a couple of people out there, actually a couple of companies that track them for me. Okay, so in a couple of weeks, I will be updating every one of my lists. Why? Because there's somebody out there who is going to update the Dividend Kings list this year. Okay, so it will be Dividend Kings list 2025. And then we will see who got added and did anybody get subtracted. Because every year someone joins or someone drops off. Same thing with the aristocrats. Same thing with the champions and same thing with the contenders. Because with 9,848 different companies, that's a tidbit of information that people like me find very valuable. All right, Uncle Sam, NU. All right, now NU I'm pretty sure is a no. Okay, NU, let's take a look at the dividends for NU. Okay, if they're not profitable, I want nothing to do with them. There are no dividends in the time period selected. No dividends, no thank you. Okay. What are the blue rectangles on the bottom of the screen? Rectangles? I don't see any blue rectangles on the bottom of my screen. The only blue things I see, these things right here, that represents the volume. How many shares are traded that day. If that's what you mean, that's just tells me how much volume there was, how many shares were traded. All right, let's keep on going. Yep, hello, sir. TikTok, dude. A little unhappy with you, but okay. DPZ, Domino's Pizza. Yep, like that one. What's up, James? Austin, what's happening? You gonna be on every night in 2025? No, dude. Okay. I almost did it for 2024. Almost. There's 365 days in a year. Okay, we are on day number 364. We have 1 day left for the whole year. I've missed 6 days. That's it. Every single day for 2.5 hours every evening. Those are volume. Yes, Annie, I did say that they are volume. Okay, Dob. You want to take a look at ATOS? What the heck is that's never a good sign when I say what the heck is ATOS? Well, a couple of things. Number one, they can't find the symbol. That's never a good thing. Okay, one, never a good thing if I've never heard it. Well, I've never heard of it. Two, the computer can't even find it. Got to be an issue there. Chad, CLM, Clam. You want to take a look at Clam? All right, Chad. No options. No, thank you. Okay. Hey, James, I have been looking for good strategies on how to invest, and I truly like yours. Thank you. Well, alrighty then. I missed 6 days. Well, yeah, I only missed 6 days. Eagle 18, you want me to explain my strategy. All right, you ready? Here we go. I invest in dividend stocks, specifically pre-qualified dividend stocks. Those are companies that have consistently increased their dividends for more than 2 decades, 20 years. Higher and higher and higher and higher dividends. A dividend is a portion of the profit given back to the investors. That's us. We become the investors. So, if the company is paying a dividend and they have their dividend coming up, stocks usually increase in value just before the dividend date. Now, with the dividend date coming up, stock price going up, you have a couple of choices. What kind of strategy do you want to use in order to have a safe, predictable, consistent 1% per week? Now, I use a covered call. That is a safe strategy. One of the safest, simplest, most predictable strategies there are. So I buy 2 weeks before the EX date. I sell a call premium at the exact same price I just paid for it. I collect the premium. Boom, there you go. 1% every single week. That's over 50% per year. Hopefully I got everything. Verizon. Somebody wants to take KH or CH wants to look at Verizon. VZ. Ooh, look at the downfall we're having for Verizon. 30 days ago, look at where we are. Okay, she went sideways for the past week and a half, but we have another down day today. Which, don't get me wrong, I like Verizon. It is on my list. However, not this week. Okay, $39.99, the closest strike price is going to be the 40. The 40 is going for 14 cents. Yeah, no thank you. Next week, 27 to 31, no thank you. Sometimes the numbers work great, sometimes they don't. Andrea, and corporations taking profits and losses. Yes, that could be it too. Okay, Eagle 18, hopefully that explained the strategy enough for you. Eric, STM Electronics, never heard of them. Bagged 1, Sava, they have not been around that much. Thank you, James. CH, you're welcome. So Sava was at 30, now they're at 2. Well, that's not good at all. Have you ever had to hold a large part of your portfolio for a long time? KG, I did. Last year was my worst year in a long time. I only think I made like 40% last year. But I had 3 stocks I carried longer than I want to. 30 to 2. Ouch. I have no idea what that means. What does 30 to 2 mean? Oh, yeah. $30 to $2. Yeah, some strange reason. Okay, so anyway, KG. All right, so last year I held Target for 6 months. Lost a fat chunk on Target. I did, seriously. PPG, I held that for 6 months too. I made a profit off of that one. Didn't lose any money in that one. And then Kimberly Clark, I held for 9 months. Now, usually, okay, listen closely. Usually, people buy a stock and hold on to it for years or decades. Okay, I bought Kimberly Clark, and it dropped. I held it for nine months. In that 9 months, I collected 3 dividends and 35 premiums. Stock was here, dropped, went on the bottom a little bit, came back up, and I sold it for a profit. Most people would just take the 3 dividends and say, it's down. Not me. As the stock drops, I will sell the dividend. I will sell the premiums on the way down while it's on the bottom and on the way up. The reason I lost on Target, let me pull up Target and show you something that you're going to have to be leery of, because it does happen. Okay? And don't kid yourself that you're immune to some of this crap, all right? Because it happens, okay? What I'm about to show you is what's called a black swan, okay? A black swan, if you've been out, driving through the countryside, walking along the river, how often have you seen a black swan? The reason why they call them black swans is because they're not that popular. They're not that prevalent. It's kind of like an albino alligator. I've never seen an albino alligator except in the Lowry Park Zoo. Things like 5 feet long, all white. Never seen a white alligator before. Same thing. Black swan is where is a oversized drop or an oversized jump in price. They call it a gap right here. There's 1, there's 2, here's 3, and here's 4. You know what they all have in common? James, have you ever held BTI? I don't think so. Okay, what do these 4 black swans have in common? Earnings report, earnings report, earnings report, earnings report. So, the lesson I learned with Target, I don't want to be in Target anywhere near the earnings reports. So here's the thing. I bought earnings. How do you handle a contract that will expire? Annie, okay, you're asking me a question, and it's a good question. Hold on. At the Lake Eller in Orlando, there are 2 black swans. Yeah, okay, I get it, but how often do you see them? You don't see them very often. Okay, so with Target last year, I jumped into Target in July of last year at 135. Okay, July, 135. It's not here on this chart because this is this year. Okay, so at 135, by the time October came along, this thing was at 102. So it went from 135 down to 102. So in November, first week in November, Target could earn shocks. Yeah, I get it. They call them black swans or albino alligators, whatever. You don't see them that often, but they do pop up, and it's not comfortable. All right, so in the first week of November, okay, target's at 110. I said, okay, great. I'll sell the 115s because it's far enough away. Overnight, the thing jumped $16. $16 overnight. I lost $15,000 overnight. In your in an option trade, do you choose market order? And if what time did order price dramatically go down? Okay, Mr. Gill or Mrs. Gill, okay? When I buy a stock, when I enter into it, I buy it at the morning opening at the market price. Because I buy the stock and I sell the option at the exact same time. Because at that time, the option and the stock are tied together. Now, we're going to actually do a trade, and you'll see exactly what I mean. They're tied together, so I already know what I'm going to make before I even do it. Hey, Riviera. Okay, so let me finish up. Okay, let me finish up with Target first. Okay, so as I was saying, I jumped in at 135. She drops down to 102 was the low, and at 110 I sold the 112s, 113, somewhere in that area. Okay, it jumped up $16. Overnight, I lost $15,000 because I didn't know then what I know now. So now, the information I have now, I would not have taken that loss. So I had two choices, $15,000 loss or $25,000 loss. I didn't know the way out, but I do know it now. Okay? All right. VHS, all right, VSH. I have no idea who that is. And it's never a good sign if I don't know who they are. VSH, VSH. Vishay, hell no. Now, apparently you were not listening. When I say weekly options only, why are you giving me something that has a monthly option? Okay, how can you tell the difference between a weekly and a monthly? Well, simple. Okay, right here, look. January, February, April, July, December. Those are all months of the year. Okay, hold on. 3 January, that's this Friday. 10 January, that's next Friday. 17 January, that's 3 Fridays away. 24 January, that's 4 Fridays away. 31 January, that's 5 Fridays away. That's weeklies. Huge difference, but it's easy to spot. Weeklies, because it tells you the weeks. 3 January, 10 January, 17 January, 24 January, those are weeks. Okay? January, February, March, June, September, January, those are months. Monthlies do not work for me. If you like them, more power to you. I don't want to see them. It's just a waste of my time. But that's me. If you like them, great. But they don't work for me. I want a simple, safe, predictable, consistent 1% per week. I can't get that with a monthly. Because monthly, well, there's only 12 months in a year. You can't do 2 monthly option trades in a month. You can only do 1 because it's only 1 and expires the 3rd Friday of the month. So how do you do it weekly? I have to sit in front of my computer. Yeah, no thanks. All right, Andrea, maybe his girlfriend. He needs to go to the gym. Andrea, I'm going to take that as a compliment. Thank you. Eagle 18, we already did that. Okay, Mel Electronics, no idea who they are. Celsius, no dividends, but I have it. Okay, yeah, I get that. Can you get 1% on Domino's? Yes, you can, Dallas. However, we looked at Domino's earlier, DPZ, and Domino's, get your 30-day high here, your 30-day bottom was last Monday. Okay, Friday and today are both down days. If you really like Domino's, my personal opinion, this is not advice, I don't give advice, but my personal opinion, I wouldn't do it until it finds a new bottom, turns around, goes back up, because it's going to. Okay, what happened here? Bottom, turn around, went up. Bottom, turn around, went up. Bottom, turn around, went up. Okay? Look for the bottom. If you like it, watch it. It doesn't take that long. I mean, there's no possible way I have no idea what your situation is. You may be able to invest in all 9,848 different companies. You might be able to do that. But for the most part, most of us can't. Gen X Niner, you did the 34s also. Cool beans. I want to get, oh, I missed that question. What was that question? I want to get 50%. Okay, CH, I get it. We all want to do that, or more. All right. Excess Group Limited. All right. U.S. Steel, they're up for sale. Yeah, but Biden blocked a sale to a foreign entity, which, if you think about it, you really can't blame him. The company's called U.S. Steel. That's like trying to sell the Declaration of Independence to France or Italy. Okay? It belongs here in the U.S. All right, CELH is Celsius Energy Drink. Yeah, okay, no, they're not 20 years old. It was Ludwig Morales who asked you to show you one position you took today. Hey, Ludwig Morales, ¿qué pasa, amigo? ¿Cómo está usted? ¿Está bien, no? All right, Maria Chavez, how are you today? Eddie, how are you? All right, here we go. Keep on going. King Dutch, hold up. Paul, how are you doing? Being patient is tough to do. Still trying to learn the discipline. Okay, Paul, Rome wasn't built in a day. It may have fallen in a day, but it wasn't built in a day. Okay? You love this knowledge? Cool beans. All right, tax exempt dude. Yo, dude, we got to chat. As a matter of fact, I had an interesting email today from someone who's going to show me another strategy in order to be able to trade and not pay taxes on the income. So if you guys are interested in it, let me know, and I'll see if I can get him on, and we can do a duo, a double show. Sir, does candle works? I have no idea what that means. Mr. Premium, are you getting paid interest on your CSP collateral? I have no idea what you mean by CSP collateral. Okay, explain that. What is CSP collateral? All right, let's keep on going. Very interested in your tax, man. Let's do it. Yeah, Paul, I'm interested in that too. Okay, now I have a few, well, I don't pay taxes as it is because my money's in a corporate account and it's offset by losses, all that kind of stuff. Cash secured puts. Ooh, I like cash secured puts. But that's a good question. Is my cash getting interest in a cash secured put? We'll have to have a conversation about that because I'm sure there are people out there that would love to know how to do that. Why is 34 not 43 call on X? Oh, Barra Daddy. Hold on a second. All right. Demolition Duel. Sir, candlestick pattern works in share market. Okay. Not quite sure what you mean by that. Interesting tax class. Yeah, I'm interested in it also. All right. So, Be Rad Daddy. Okay, be Rad Daddy. Why the 34s and not the 43s call on X? All righty. Okay, it's a fair question. Okay, so, be a Rad Daddy. Right now, the stock is at 31. I bought it at 41. And you want me to sell the 43s. The 43s aren't even on this chart. What makes you think that there's any value to that 43? Well, let's take a look. Now, right here is the option chain. The option chain tells me what an option is worth. All right, so let's get rid of this one. Let's get rid of this, and let's open it up to look at all the options. Okay, so here's all the options. Okay, now you might be asking yourself a question. All this black is out of the money, and all the purple is in the money. So as you go in the money, the numbers get higher and higher because they're worth more. As you go further out of the money, the numbers get less and less. Okay, great. Well, at 31, That's right here. See where's the difference between the purple and the black? This line right here, that is called at the money. ITM, in the money. ATM, at the money. OTM, out of the money. Okay? In the money, at the money, out of the money. Okay. So currently the stock is at 31.37. Hold up. I got 2 questions here. All right. 2 questions. Hold on. I'm unfamiliar with option trading. Sit, chill. You'll understand. Demolition Man, he doesn't really look at candlestick patterns, just where the stock is. Thank you, Paul. Paul, I should make you a moderator on YouTube. A lot of crazy people on YouTube. Some weird comments. I'd appreciate it. If you want. You don't have to. But I got like 3 or 4 moderators on TikTok. They take care of the colorful characters. Let's call them colorful characters so we don't offend anybody. Okay? Claire, how are you doing? Now, I'm a Gen Xer. I really don't give a rat's ass about your feelings. No safe spaces here. I ain't going to give you a participation trophy, but I don't want to hear any crap, so we'll just call them colorful characters. Okay? And be done with it. All right. So, you want to know why I don't do the 43s? Well, here you go. Because this coming Friday, okay, 3 January 25, these are the options that are available for this week. I can do any single one of those. So, at the money right now, 31.37 would be this one right here, 31.50, $1.45. Now, $1.45 on a $31 stock is a little over 4%. It's not bad for 1 week. You realize that 4% a week is over 200% a year? You could double your money every 6 months at 4% a week. Okay, doesn't happen all the time, hardly ever as a matter of fact. So let's take a look. I sold the 34s. The 34s are right here. Well, currently they're only worth 59 cents a share. Well, I sold them last Friday and I got $1.59, which is over 4%. All right. So the 43s are all the way down here. And look at how valuable the 43 is. 0. That's why I don't sell the 43s. They ain't worth anything. Another question over here on, okay. Hey, Flock Queen, you sold at 32 and a halves? You got more balls than I do, honey. Because right now it's at 31.37. You sold at 32 and a halves. All right, 75%. That's still 3%. Cool. I don't see it hitting 32 and a half. Because right now it's at 31. 32 and a half? Yeah. You got, way to go. I mean, seriously, good for you. All right, now I look at it twice a day. Cool. But on Friday, yeah, I sold the 34s because I thought it was safe. Now that's all it comes down to. It's just a mathematical equation. Okay, I bought it at 41. It's currently at, what was it at on Friday? Yeah, Friday it was at 31. Okay. So on Friday, I sold it for 149, 159, whatever it was. Okay? So whatever it is, you have to decide what is right for you. Because apparently, my risk factor, I bought the stock this morning. Well, that's a different story. You bought it this morning. That's an awesome trade. You bought it this morning. Okay, she was at $30.99. So she opened up at 31 this morning. Okay, why didn't you do the 32s or the 31s? Anyway, no, wait, that was yesterday. All right, what is today? Here's today right here. All right, so today she opened up at 31.10, and you sold the 32.50s. Okay, there's nothing wrong with that. You know. Anyway, so that's why I did that. So let's go back to here. We don't need to see all of this. Get this back over here. And let's go through some more of these questions. I got about 100 questions and an hour to do them. All right. So if you made 1.59 on X call, it may not automatically be assigned if it closes at 34.50. Well, correct. I sold the 34s. I didn't sell the 34.50s. Now, The thing is, there's 4 people. All right, think of it this way, KG. There's 4 people on the dance floor. Okay, think of it that way. 4 people on the dance floor. Okay, you'll hear me using an analogy. If you dance to the music, you got to pay the fiddler. It's just an analogy, metaphor, if you will. 4 people. Me. I buy the stock. I sell the option. That's me. Second person. The market maker. He's the only person you can buy from or sell to. Think of it as the store owner of the grocery store down the street. You know, Circle K, 7-Eleven, Quick Stop, Quick Mart, whatever. The corner store. Guy owns it. He's the guy you buy from. He's the guy you sell to. The only one. Okay, so it's me, market maker. You have the stock buyer. Stock buyers will buy an option looking to get a discount. Okay, hold up, Demolition Man. Okay, hold on. Stock buyer is looking to buy a stock at a discount. What does that mean? Well, currently it's at 31, and he buys the 31 call option. He's hoping the stock goes up in value, so no matter where it goes, he has the right to buy it at 31. That's just the one we're looking at the moment. That's the stock buyer looking for the discount. Person number 4 is the option trader. The option trader wants to buy that 31 option at whatever it is. Okay, the 31 option at $1.90 a share. He wants to buy that, and he wants to double or triple his money. All right, great. Well, there's a lot of factors coming in. Okay, what option did I sell? I sold at 34. So if the stock is at 33.99, okay, I keep the premium, I keep my shares. Everybody goes away, and then we start another dance on Monday. If it is above 34, come Friday afternoon at 3:59, okay, if the option buyer, okay, whoever bought the stock option, who wants the stock, he's not going to buy it from me because he already paid $1.90 per share. So his break even is going to be $32.90. That's at the money at the moment. Okay? So $32.90 just for him to break even. I mean, the stock has to go up almost $2 for that person to break even. The option buyer, if he buys it at $1.90, he wants to double or triple his money. So those are the 4 people on the dance floor. And you got to take into consideration, what's the stock price at the moment? What is the strike price? I mean, which is the option you're talking about? What did they pay for it? I mean, are they going to profit or are they going to lose? Okay, an option buyer wants to double or triple his money. If he buys it for $1.90, he wants to get $4, $6, $8, something like that. Okay, but if the stock doesn't move and the option price doesn't go up, he's not going to do anything. But here's the thing. The market maker, if the stock is at, in this case here, right, if I sell the 31s, let's take mine for instance, mine 34s. If the stock is at $33.99, everybody goes away. If it's at $34.01, well, the stock buyer is not going to buy it because his break even is just not there. The option buyer is not going to exercise it because he didn't double or triple. The only person left is the market maker. Will he take that stock away from me at 34 if the current price is at 34.01? Yes, he will, because he buys and sells every day. That's his job. If it's 1 penny over the strike price, more than likely he's going to take it. If it's 1 penny under, he's not. Okay, so it all depends. On Friday afternoon, you get a lot of mathematical problems going on. What did I buy it for? What kind of premiums did I collect? Where's the strike price now as compared to the current stock price? And then you just do a little bit of math. Am I making money or am I losing money? Where is the safest position to have my position, for lack of better words? Okay, I want to be safe, I want to be predictable, I want to be consistent, and I do not want to lose. Okay, so it's always a mathematical scenario at 3 o'clock. Now we jump on, my live trading, we used to jump on at 3, But now we have, you know, over 24 people. So we jump on at 2:30 to make sure everybody can look at each and every one of their positions to make sure nobody's losing any money. Now, I like it if nobody ever loses. That would be great. All right, so let's keep on going. Got a question over here on YouTube. Sir, I'm a beginner. How to trade the stock market or some strategy or some advice? Sir, please provide your valuable insights. Demolition Duel. Cool beans. You know what? Just keep on coming back. Flock, the best time to be active in the strategy is every morning, Monday, Tuesday, Wednesday, Thursday, Friday, and Friday afternoon. Paul, thank you for that. If you're new, now I'm getting ready to start a new site, okay? And it's specifically for people who don't have a lot of money to start out with. And it's going to be on Robinhood. Now, Robinhood is a little bit different, okay? A little bit different rules, but still, if you don't have a lot of money to work with, well, that's what this next website is going to be. Now, I'll be showing you my grandson's account, starting out with $50, and then we add just a couple of dollars every week. He's 4. So by the time he's 18, I like to think, number one, he deserves the money because we are going to be very finicky because if he goes down the wrong path, he ain't getting it. And that's kind of weird. We don't know what we're going to do with it in that scenario. Tax exempt guy. I don't know if, wait a minute. That is you, dude. Do you want to jump in? Do you want to duo right now? People want to know. People want to hear this shit. Bid, ask, spread, and super wide. Right now, yeah. So during the day when the markets are open, the bid and the ask are usually a lot tighter. It's usually with a good stock, 1 or 2 cent spread between the bid and the ask. It's usually 1 or 2 cents. I gotta send this guy a message right here. Reply to tax exempt guy. Here we go. All right, dude, if you want to chat right now for everybody to hear, I think it would be awesome. If you have ways for them, it would be great. Okay. Now let's go all the way back. Where are we? Holy cow, I have all these questions to go through. Shit. That's a lot of questions. What happens if it goes up? Well, if it goes up, that's a good thing. Sorry about your wife. Thanks, Sean. Wasn't my wife, it was my girlfriend. Okay. Colgate. Okay, Tony, we already looked at Colgate Palmolive. The numbers just didn't work for this week. How much you have earned thus far from the unrealized loss on X? How much have I earned? So, ooh, that's a good question. Well, now I do have, it's going to be kind of strange to answer this question for you, Michael, or is that Michelle? Michelle. It's going to be challenging to answer the question because I have 6 different accounts and I have US Steel in almost every single one of them. Okay, so I will take a look at the one account and we'll go from there. Okay, right here. Here's US Steel. Okay. Now, here's the current trade for this week. Okay, so let's go to account statement. Take a look at US Steel. All right, I don't know if you can see this okay. All right, I don't know if you can see it okay, but here we go. All right, see over here, the date. The date, December 2nd. US Steel, 3,400 shares here, 100 shares there. That's 3,500 shares. Okay, so I bought it for $41.25. I sold the 40s for $2.64. So let's bring up that calculator again, just for the fun of it. All right, let's get out of that. Now, this is how this works. You ready? 3,400 shares. $2.64 a share. Okay? $2.64 a share at multiplied by 3,400 shares. That's a grand total. $8,976. That was on the 2nd of December. That was just one trade. All right, so I'm going to hit plus memory. That's going to hold on to that number. Okay, hit clear. Okay, the very next, very same day, okay, we only got 261 because there's only 100 shares, one contract at 261. Okay, so that's only 261 bucks. So 261. We're going to add that to the 4,000 or 5,000, whatever that was. Okay, clear that. Now, okay, I sold 300 shares for whatever reason. Okay, so on the 10th, right here, I sold 16. Is that right? Yeah, on the 10th, I sold 16 contracts at 147. All right. So 16 contracts multiplied by, what was it? 147. Multiplied by 147. All right. That's not right. Clear. 16 contracts multiplied by 147. That's better. Okay, that's 2,300 on the 10th. Okay, and then there was the 13th and then the 26th. Okay. Hold up. Okay, plus memory. Clear. All right. Next. All right, we did that one. On the 13th, okay, right here, see it? The 13th. 1, 2, 3, 4. Okay, we rolled it forward 11, 22, 32. All right, so 32 contracts at 169. Okay, 32 contracts at 169, and that equals another $5,000. Thank you very much. We'll add it to that, and we'll clear that out of there. Last trade was the 26th of June. I showed that earlier. 3,200 shares, 32 contracts. Okay, profit was 104. Because I rolled it forward. We said bought that one, sold that one, 104. Okay, so bring this up. 104. Multiply that by, what was it again? 32. 3,200 shares. Okay. 3,300 bucks. Plus memory. Clear, memory recall. So, since December 2nd, I brought in $20,000 just on US Steel. But here's the thing. I jumped in right here. See it? Here's my price. I jumped in at $41.25. Well, currently, US Steel is at 31. So I lost $10 per share, but I kind of didn't because I haven't sold it yet. You only lose money when you sell for less than what you paid for it. And trust me on this one when I tell this one to you. I have no intention on selling for a loss. None. None whatsoever. As a matter of fact, this account here, I think this is the right one. Nope, this is not the right one. All right, this account has like 3 losses in it. I have one account that has 0 losses all year. 0 losses. This account here, I had 3 losses in this one. Okay, this is the one. This is the one where remember I said I hit the wrong button and I lost 2,500 bucks, and I lost another 2,500 bucks when I couldn't make a trade. Okay, when that hurricane came. Okay, remember I couldn't get online because we had no water, no electricity, no cable, no internet, no phone. I had to get in the car and I had to drive up and down the street looking for an internet connection. I found a week when I was able to get 3 trades in and I couldn't get that last one trade in. And that was a Friday. Because the hurricane came, I think it was on a Thursday night. And I couldn't get online Friday. So anyway, besides the point. Okay, so that was where I'm at. Where am I? Right here. Okay, so you wanted to know what my unrealized loss was on US Steel. It's $10 a share. I have 3,200 shares. That's $32,000 potential loss at the moment. I have no intention of selling at a loss, and it's not a loss until you take it. That's just like a profit. It's not a profit until you take it. It's not a loss until I take it. I have no intention whatsoever to sell a U.S. Steel at a loss. And I will continue holding on to it and rolling it every single week and picking up 3, 4, 5,000 every single week just from U.S. Steel. All right, so let's keep on going. Do you change your sell price every week if nothing happens the first week? See, I tried explaining this earlier. Mondays when I do my buying, okay? I do my buying. I put my money where I think it's going to be best, right? On Friday, that's where I do a lot of mathematical calculations. What did I buy the stock for? What covered call did I sell against it? How much did I bring in? What is the stock price now? What is the option price now? What is the best strategy for me to roll it into next week, let it go, let it get excited, let the option expire, but keep hold of my cash and create a consistent cash flow on a weekly basis. Okay, so it'd be much easier if you were part of my Friday afternoon trading class, because you'll see how it happens. Okay, so right now, at this moment in time, U.S. Steel's at 31. Well, I bought it at 41, okay, 41.59, something like that. Okay, I have no intention in selling it. I sold the 34s this week. All right, and next week I'll probably sell the 34s again or the 35s. So next week, okay, as a matter of fact, for the fun of it, let's do this right now. Let's go back to right here. Okay. Let's do a rolling order with U.S. Steel. Okay, see what it's worth. Holy shit, it's worth $1.30. Now, but look where it is. It's at 31. Okay, so let's change it from a 34 right here. Let's change it to a 33. See if we can get more money. Okay, change it to 33. Nah, ain't worth it. Did you see that? Changing it from a 34 to a 33, I lose $1 in value. But what am I gaining in premium? Gaining 3 cents. I'm not going to change. I'm not going to lose $1 for 3 cents. Hell no. So let's go back to 34. Okay? See? The 34 is worth $1.30. Now I have 3,200 shares. That is, oh, how much is that? Let's find out. Clear. $1.30 multiply 3,200. Okay, that's $4,000. Why the hell would I want to walk away from $4,000? Doesn't make any sense. Okay, so here, where I'm rolling forward, I'll be buying back this week's 34, selling next week's 34. I can pick up another $1.30. I probably should do that because that will load up my profit for the year, because I picked up a nice fat premium on last Friday. I can pick up another fat premium this week to go on 2024's balance statement. Could. But I'm not going to. I'm going to wait until Thursday. All right, let's get out of there. Okay, so let's keep on going. A-R-R, cart. No idea what the hell cart is. C-A-R-T. All right, Maple Bear Incorporated. Why is it I've never heard of them? C-A-R-T. Maple Bear Incorporated. That's why I've never heard of them. There are no dividends. That's a no. No dividends, no thank you. Andrew, thank you. No dividends, no thank you. Okay, so now there's a reason why I like dividend stocks. Absolute worst case scenario. If and when the stocks go down, I'm getting a higher and higher dividend every year. That means they're sharing more and more of the profits. Expire worthless, then sell another call on Monday. Absolutely, Scott. You're paying attention. That's awesome. Hello, it's me. I've heard about you for a long, long time. I forget who said. Wait. Todd Rundgren. Who's? You don't know who Todd Rundgren is? What band was he in? Damn it. All right. Have you seen MYND and its dividend yield of 250? Well, let's take a gander at it then. But to answer your question, MYND, no idea who the hell they are. They have no options, dude. Okay? No options, no thank you. Okay? I can't get a weekly cash flow if I have no way of doing it other than sitting in front of the computer watching it all day long. And there's a $2 stock. How do you possibly think a $2 stock has 20 years of increased dividends? No. Caterpillar. We looked at Caterpillar earlier. The numbers just didn't work. Okay? And Caterpillar having a down day. Look at this. 30-day high, 30-day bottom. She went up. She pulled back. 3 days to the downside. No, just gonna have to wait on Caterpillar. Sorry. Carnival Cruise Line. Same thing. Okay, you got your high right here. 1, 2, 3, 4, 5 days to the downside. No. Just gotta wait for that bottom turnaround. What percentage of my income should I invest? I make about $75,000 at 30 years old. Woody. Okay, Woody, here's my opinion. It's just an opinion. You've got to figure out what is right for you. Now, at some point in time, Woody, you're 30 years old. You are going to need X amount of dollars in your account bringing you a consistent amount on a weekly, monthly basis, whatever it is, however you want to do it. Okay? Whatever that number is, only you know what it is. Okay? Do you need $5,000 a month? Do you need $8,000 a month? Do you need $3,000 a month? Do you need $20,000 a month? If you need $20,000 a month, you got a spending problem, dude. Besides the point. The more you put in, the more it compounds, the faster you will reach your target. Okay? You want to reach your target faster? Stop buying stupid shit. Okay? I don't know if you ever heard of Gary Vaynerchuk. He tells you, plain out. You want to get there faster? Stop buying stupid shit. Simple. Find an investment strategy that works. Stay consistent with it. Reach your goal as fast as you possibly can, and then do whatever you want. You would not believe the burden that is lifted off of your shoulder when you don't have to worry about where's your next paycheck coming from. How am I going to pay my bills? It sends a lot of stress to a lot of people. FDVV, never heard of it. It's going to be a no. DGRO, that's going to be a no also. Okay, now I've been doing this for over 20 years. So you give me a stock to look at, I'm going to know right off the top of my head, do they have 20 years of increased dividends? Well, Misty is a no. MSTY, no. No dividends? No, thank you. Woody, open a Roth IRA and put as much as you can in 1 year. I think it's about 10 grand. All right, I'm not going to agree 100% with Mr. Tyler. Those are ETFs. Yeah, electronically traded funds. You want to give your money to a computer? Have at it, brother. I don't do it. If it's an electronically traded fund and they have consistently increased their dividends every single year for 20 years, it would be on my list. If it's not on my list, well, then it's going to be a no. Okay? So I'm not going to agree wholeheartedly with Mr. Tyler. Because number one, you're limited on how much money you can put into a Roth IRA. All right? Now, you could put it as much as you possibly want into a trust. Once it's in a trust, ain't nobody's damn business. You can put it into a corporation's, hold on. Not retirement fund. Pension fund, that's what I'm looking for. If you had a corporation, a C corporation, an S corporation, one of those, you can put it into the pension fund. But everybody in the corporation has to have same access to the pension fund. There's a lot of ways you can put your money where you don't have to pay taxes on it and you can let it grow faster. Galaxy, thank you for that. That's very lovely of you. All right, Tyler, let me just create a personal portfolio with whatever else you can be comfortable with. There you go. Okay, Juan, Misty, yeah, no. Where should one put 200K at the moment? Pizza party. We're having a pizza party at dude's house. You get 200 grand to blow on pizza party. Let's do it. I know nothing about you. I cannot give you advice. You want my advice? Simple. Send me your number. I'll give you a call. We will chat. I know nothing about you. I cannot tell you what to do. I could, but it wouldn't make any sense because I know nothing about you. Thank you for what you do. I really appreciate it. You're the only trustworthy person I found on the app. Wow. I appreciate it. Thank you. Do I trade Forex? Hell no. Okay, now Forex is almost like any other trade, okay? You have to consistently do it every single day to make a profit. Okay, I have no desire to sit in front of a computer. Can I give you my number? Galaxy, yes, you can. DM me your number. Okay, make sure you send us to the right place, and I will give you a buzz. What are the most erratic stocks you've seen with the craziest differential? Okay, Woody, I couldn't really answer that question. I have a tendency, AUX short, bro. Yeah, dude, that's a Forex thing. No, sorry. I don't really keep track of that, Woody, to be honest with you. Galaxy, thank you for that. We call them CME gaps. CME gaps. Okay, the Can Man, FRUTO, not on my list. Are you bullish on Target? TGT, hold on a second. Actually, yeah, I like Target. Take a look. 30 days ago, where are we? Where are we? Right there, right there. All right, nah, you missed the opportunity on Target. Think about it, all right? 30-day high, bottom, is your 30-day bottom right here. Shoots up, pulls back. Here's where you should have jumped in. Was that 4 days ago? Okay, here's your bottom. You cannot argue with numbers and you cannot argue with charts. Here's the 30-day high. Here's your 30-day bottom. Okay, shoots up, profit taken, drop it down. Now she went up. Now she's here, really close to the high. She's taking profits for the last 2 days. So you missed the opportunity. It's okay, I missed it too. All right, I wasn't looking at Target last week. Holo, Gregory. All right, I don't know what Holo is. Holo. Oh, hell no. FRUTO. Can Man, that's a no. BKKT. Never heard of it. BKKT. Hell no. What's the way out that you know now? Talking about your loss on Target. Oh, that would be rolling it forward. Okay? Rolling it forward. I didn't know you could roll it forward. But now I do, so I wouldn't have lost. That's a no. What the hell are you thinking? Yeah, one. That's a no. What the hell are you thinking? Okay, a viral Solanke. SoFi? No. No dividends? No thank you. Simple, right? No dividends? No thank you. Do you have a course for your strategy? Oh, I'm working on it. I had one, it wasn't that great. I probably should do another one. Soundhound? Yeah, no, they're not 20 years old. Sound is a hell no. Gen Xer, way to go. Hell no, what the hell are you thinking? Come on, seriously, guys. Girls too, I'm not going to exclude you, okay? No safe spot for anybody here. This is your money we're talking about. If you want to just put it anywhere willy-nilly, I like that one. Anywhere willy-nilly, go ahead. It's totally up to you. But don't come asking me about silliness, okay? The company's not 20 years old. How can you have 20 years of consistent profits with a company that's not 20 years old? Hell no. Look closely. This is your money. There's 9,848 different companies. There's a whole bunch of them. Why are you putting them into companies that aren't old enough? It's like driving around. Oh, no, I'm not going to say that. That's just disturbing. No, Okay, 20 years of consistent profits. And it's about a month. Rig looks ready to go. Rig, R-I-G. Okay. Ooh, nice. All right, well, let's see how well they pay dividends. NEM for a gold play. Hold on. NEM, that's... Damn it. What's your play on Nucor? Okay, hold on. Newmont and Nucor. Okay, hold on. Which one were we looking at? Newmont. Yeah, Newmont and Nucor. NEM and NUE. Shit. Just had me look at one. Rig. Yeah. Okay, hold on. Rig. Why do I think Rig doesn't have dividends or not enough of them? Why is that? Why? Okay. Sorry, dude. This is going to be a no. Check it out. In 2007, the dividend was 33 bucks. How the hell can you have a $33 dividend? Right. Then it went to 79. Then they dropped to 56. Then they dropped to 0. They went to 75 cents, 75 cents, and now 15 cents. And you seem to think that's a good investment? I don't know. We could all just say, oh, hell no. Think about it. Why? It is losing money hand over fist. Why would you want to put money into it? Okay, the dividend is a profit they give back to the investors. So if a couple of, that's in 2015. Dude, they haven't had dividends in 9 years. Why the hell are we looking at? Oh, yeah, no. You're in the wrong place, dude. I'm not looking for capital appreciation. I'm not looking to buy a stock and have it go up. If it's not giving me weekly cash flow, weekly, that means every week. Every week. Not just a week 10 years in the future. No. Every week. Okay? That's okay. You're new here. I'm going to cut you some slack. All right. Soundhounds, no. That's right. What the hell are you thinking? Oh, let me get out of this one. It's kind of bright. All right. How many companies do you think are good to track that would generate a little income? Alex, that's a great question. Now, Alex, here's the thing. Okay? Now, it's really not that difficult, Alex. All right. Let's go here for a second. I want to show you this, Alex. Tell me what you think of this. Okay, this is December 2024, Alex. You ready? Bank of America, General Motors, Occidental Petroleum, American Express, Bristol Myers Squibb, Mondelez, U.S. Bank. That is the dividend stocks for Warren Buffett. These are Warren Buffett stocks. All right, this is for December. Okay, so what was in November for Warren Buffett? Coca-Cola, Kraft Heinz, T-Mobile, Johnson & Johnson, Chevron, UPS, Moody's, this is a new one here, RPRX, Kroger, Visa, Siri, Apple, Wells Fargo. Now, Alex, did you see them? Look. This week here, 1, 2, 3. Why can't you look at 3 stocks in 1 week? That's one. Look at this week. Oh, 1, 2, 3. Another week, 3 stocks. Look at this week. 1, 2, 3. 3 more. So 3 stocks, 3 stocks, 3 stocks. 4. There's 4 in this one. Johnson & Johnson, T-Mobile, Heinz Ketchup, Coca-Cola. 4. This is just Warren Buffett's list. Okay? Now, I'm sure you know who Warren Buffett is, and I'm sure you know each one of these companies. Okay? That's Warren Buffett's list. Okay, here's one of my lists. Uh-oh, not there. I got to go somewhere else, right here. Right there, right here. Okay. Okay, here's one of my lists. Comcast, Gap, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan, Marvel, NTAP, Cisco. That's just for the first week of January. Okay, that's only, 3, 6, 9. 9 companies for the first week of January. Okay? Second week of January, MasterCard, AT&T, Verizon, Oracle, Abbott Labs, FCX. That's 2, 4, 6. 6 companies second week of January. Alex, it's really not that difficult. You find a good company, throw it into the calendar. The calendar will tell you when they pay their dividend. And when they pay their dividend, they have a tendency to go up in value. So if it's going up in value, that's a perfect time to jump in and buy it. You get a few dollars and you get the hell on out. All right, I can't read that name. My name is Christian Perez. ¿Qué pasa, amigo? ¿Cómo está? At 19 with a bachelor's degree in finance. I love what you do. Well, alrighty then. That's more of a statement than a question, but all right. We've got 20 minutes left. Tony Hawk, what happened to you? I got old, dude. You get old, you get old. Wow, nice Spanish. Muchas gracias, señor. Yeah, very interesting. Yadot, thank you. What do you think about Upstart? Well, is Upstart 20 years old? Do they have 20 years of consistent profits? No. If they don't, well, I have no interest in looking at them. Isn't that weird? Okay, Pedro, cash secured puts, then a covered call makes the wheel. Yes, I know exactly what that is, but here's the thing. Pedro, now I explained it a little earlier. This strategy that I am giving you here for free, no strings attached, was created for my 9-year-old daughter. Simple, safe, predictable, consistent, no way for her to lose. Okay? Now, if 50% a year does not entice you, I cannot help you out. I'm not going to go into all the different trading strategies there is. It just gets confusing. This is more or less an introductory and a free gift. Okay? It's simple, it's safe, it's predictable, it's consistent. I don't know what else you want. I like your style. How can I start? Roger, Hawaii, how are you today? Well, Roger, if you really want, you can send me your number. I can give you a buzz. I don't try to sell you anything. It's just we can chat because this is not for everyone. Now, when I say this, this is going to turn off a lot of people. Are you ready? Here you go. This is boring as hell. This is monotonous. This is the exact same thing over and over and over again. Okay? I will buy Comcast the first week of every single quarter. That means the first week of January, the first week of April, the first week of October, and the first week of whatever the hell that is. Okay, it's the same companies over and over and over. It's nothing new, nothing exciting, and it's only 1%. It is boring as hell, but it's consistent, and it's safe, and it's predictable. I'm retired. That's what I want. Okay, you'll hear me say almost every video you hear me on, you say, hey, I'm James, this is Dividend Stock Talk, brought to you by the 10-Minute Trader. I want to sit in front of my computer 10 to 15 minutes, make my 1% be done and over with. You want to see something funny, something crazy, something wild? Here you go. You ready? Here you go. Here you go. Here we go. Here we go. Here we go. Here we go. Look at this right here. Account number 1, $168,000. What is 1% of $168,000? That's $1,700 a week. How much time am I putting in? 10 minutes a day. That's less than an hour a week. Less than an hour a week, I'm making $1,700. $1,700 an hour. That's just one account. Remember, I told you I had 6 accounts. 168, 190, 130. I'm not sharing the other 3 with you. So you figure it out. Is 1 hour a day of my time worth this crazy amount? Hell yeah. But it took me 20 years to get here. You're not going to get here that quick. Some of you may have more money than I do. And you know what? That's great. We don't all start in the same place. Okay, we not all have the same advantages or disadvantages. We're all different. So Pedro, yeah, I like cash secured puts, but I don't teach them here. Okay, so Roger, as I was saying, if you're really interested, DM me with your number right up here where it says, where the hell did it go? Right there, okay? Right there where it says Dividend Stock Talk, and there's a picture of me, okay? Click on that. That's my DM. Send me a message with your number. I will give you a call. 86 is in the house. Woohoo! All righty. All right, so KG, what is the math you look at the start? What the hell is that? Diagonaling up something like X as it rises to move strike. Dude, you're part of the morning trading group. You actually witness as I'm trading. Okay? Hold that thought. Mr. Premium. Sounds like the old lady has a smoker's cough. Hear that, Jacob? You're an old lady. That's actually my son. My son is coming to join me. He's going to teach me how to get rid of all these cameras. I got 1, 2, 3, 4, 5, 6, and then one down here, number 7. Now, I have the software on my computer, and we're trying it out tonight to be able to hit one button and to broadcast through all of them. Okay, so the old lady. All right, anyway. He didn't like that, but, you know, it is what it is. Okay, so... Thanks, Jacob. All right, can you change the call after being set up before? Oh, what was that question? Shit. All right. All right, user 537079, whatever. Can you change the call after being set up before the week is over? Yeah, you can. The nice thing about options, okay, once I make a trade, you don't need to see all that. Once I make a trade, I can go in, buy it back, sell it, buy it. I can do lots of stuff. Lots of stuff you can do. All right, so it looks like the tax-exempt dude took off. But anyway, that was the guy I was telling you about. He was actually here. Okay, great. But he's gone now. But I saw a couple of his videos. I said, oh, shit, some of the people following me would like to hear some of that stuff. So he wants to do a collaboration. Great. So one of these days, me and him will get together, and we will we'll make an event of it. You know, so more of you can be here to see how to trade and how to trade and not have to pay taxes. That would be freaking awesome. Laurie, when and how will you know about your new trading programs? Well, I'm hoping my son helps me out because, see, I am good at some things. I'm a Gen Xer. I admit it. You know, we are good at some things and we are not good at others. Dotting the T's, crossing the I's, that's not my thing. Okay, get me here in front of the camera. I'll tell you exactly what I do and I'll show you how to do it. Okay, putting it all on paper, yeah, that's where I have to pay someone to do that. All right. Meatloaf, bat out of hell. Yeah, I like that one. 2 out of 3 ain't bad. You like AT&T? Yes, I like AT&T. I also like Starbucks. Starbucks is pretty cool. Now we got 22 minutes left, so I want to answer all the questions first before we go on any further. Utopia and Nas. I have no idea what that means. Pedro, KHC, Starbucks. Yes, I like Starbucks. I like KHC. Now, Starbucks usually works great. Usually. The numbers work great for Starbucks. You know what? We have time, so let's take a look at Starbucks. SBUX. Starbuckies. All right. Oh, big drop today in Starbucks. Not good. But anyway, currently at 90.85. The 91s are going for 71 to 110. Okay, so 71 to 110 means you can get your 1% out of it. But look at the numbers on the chart. Here's your high, here's your low. 3 days to the upside, okay? But today it pulled back. What's with that? What's with that crap? I mean, come on, really? Here's your high, 30-day high, 30-day bottom, 2 days to the upside. I like to get on to day number 3, but today it pulled back. But is it just an anomaly? Is it going to go higher tomorrow? Because here's your high, here's your bottom. What usually happens? Well, it usually goes up until it doesn't. Okay? La 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 la. Scott, Todd, Utopia, and Nas. I have no idea what that means, but okay. Thank you for the information. Where all your trading occurring? Oh, where is all your trading occurring? Okay, where is all your trading? TBA, a Roth, IRA. Okay, yeah, it's in. It's in a place where the IRS can't get to it. See, there's a lot of different. See, if you're really worried about taxes and your money, you really, really need to talk to a tax strategist or a tax planner. It is your legal right to legally reduce your taxes as much as possible. If you can find a way to legally not pay taxes, that is up to you. Okay? Nick's Mods. Okay. Hi, Nick's Mods. I'm in for the party. Pizza party. All right. Feelings on rig. We already looked at that. Okay. Is he looking at TikTok? Oh, yeah, I am looking at the TikTok posts. However, okay, I can't read them as fast as they come in. So I actually pause them and I go through them one at a time. Now, I've been on many channels before and I try to get my comments heard. And the comments just go so fast that the person, me, can't read them all. So I actually stop the questions and I do them one at a time. At a certain time of day, which is right about now, I stop looking at all the stocks and I just answer the questions. Okay? So we looked at rig. That is a no. Okay? Yes, he is, but it is delayed. Yeah. If I could go as fast as they come up, you probably wouldn't understand a damn word I say. And I can talk fast. I'm from New England. We can talk about as fast as we want to do. But you guys got to understand everything I say if I go really fast. So I go a lot slower so you can see how it looks. How you look up dividends. Okay, Matthew. Matthew-san. Matthew-san, how are you today? All right. I look at Yahoo Finance. Okay, Yahoo Finance is right here. I put in the stock symbol. And over here in the bottom left-hand corner gives me all the information I want to look at. Summary, news, research, chart, community, statistics, historical data, profile, financials, analysis, opinions, holdings, a whole bunch of stuff. The information right over here. This is all the information you can look at. Now, when I want to look at historical data, well, what is historical data? Well, historical data, it's the high of the day, the opening of the day, the close of the day, the volume, the dividends from the very beginning. Now, these are all the dividends for AT&T. So we can go all the way back to 2004. I could go back further if I wanted to, but it's past 20 years. Why do I want to look at more than 20 years? I want to look at 20 years. That's about it. Have they increased every year? 31, 32, 33, 36, 40, 41, 42, 43, 44, 45, 46, 47, 48, blah, 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 blah. Okay? I like knowing exactly what the company is paying. Is it a good place for me to put my money? And you guys are just along for the ride, okay? I'm doing this for my children and my grandchildren. So when I am long gone, well, they can say, well, how did Grandpa do it? Grandpa, that would be me, Papa G. How did he do it? Well, they can have all these videos because they have videos of me doing weird shit. Here we go.
Hi, I'm JC, and me as you being part of my internet.
Hey.
21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
Videos of me doing weird shit with my daughter back, was this 15 years ago, 12, 13, 14 years ago? Okay. So now they can have this set of videos. Now I've done a video, I did 2 videos a day, every single day except for 6 days. Okay, I missed 6 days this year. So that's 700 and something videos just this year on YouTube. Okay, then you throw TikTok in there, that's another couple hundred videos. And then you throw my podcast in. There's over 900 episodes in my podcast. Because people want to hear this stuff. People need to have other avenues to find out financial information that may be helpful to them. So when I'm not here, at least my children and the grandchildren will be able to see me doing this strategy. Because the stock market's been around for 400 years. 400 years. The very first dividend stock was sold in 1602. Okay, it came here to the United States in 1778, I think it was. Okay, that's when the stock market started here in the U.S. But you could still buy stocks from European companies that are a couple of hundred years old. Well, the options have been around since the 70s. This stuff is not going away. Okay, you can even look at the time of even in Roman times, they had stocks, options. I'm not 100% certain exactly, but they did speak of paper trading, for the valuation of a certain company and a portion of the profits. Okay, it was in a couple of my books I wrote. I think in 1145, some clergyman traded one of his estates for 1/8 of a share of the Great Copper Mountain Mine. Imagine that, the Great Copper Mountain Mine. I think it's in Poland, I think. Okay, but for 1/8 of a share, that means 12 cents on every dollar that came out of that mine. Now that mine just recently closed in 1998. So 11 something. That's 900 years of profits this dude is getting. I don't know all the details. Maybe he sold it, maybe he didn't. I don't know, but that's what the paperwork said. Okay, so he owned 1/8 of that mine. Okay, that mine ran for almost 1,000 years. All right, anyway, let's keep on going. Enron, happy holidays. Keep up the good work. Cool bean. Mr. Rizzo, nice to see you again. I want to have one or two of my daughters, long term, next 20 years, unsure of good dividends. I'm a little lost there, Mr. Rizzo. I have one or two of my daughters long term. Okay, I think you might have to be a little bit more detail on that one. Let's see if we can keep going through some of these questions. Okay, British Petroleum, love them. Starbucks, love it. That can't be it. No, it's not it. All right, hold on. All right. All right. All right. BP, I love British Petroleum. I love Starbucks. Me thinks F is cheap, and the premium was 30% more than the call at the moment. Secretariat, last week Ford had a better premium than this week. So this week it's not as good. And don't get me wrong, I love Ford. It's in a great position at this moment in time. However, I'm going to wait until the premium is better. Thank you, Royal One. Apple. Oh, I like Apple, but not today. Tell me something about Misty Dividend, please. All right, no worries. How about no thank you? Okay, Misty, M-S-T-Y, no dividends, no thank you. Okay, it's not on my list. TikTok. Dude, I've been watching you on TikTok for 358 days. Good. Rizzo, 2 stocks. Yeah, I kind of thought that was kind of funny. Could you tell me what you think of T-Pet? All right, King Dutch wants to look at Nike. Now, I like Nike, but T-Pet, never heard of it. Now, usually, what do you get with a company I've never heard of? You said something about 710% CTB. I have no idea what that means. What does... I know what 710% means. I know what that means. But is that you lost 710% of your profit? You made 710% of your profit? It went up 710%? What does CTB mean? No clue. Cost to borrow. Now, I'm a little lost. 710% cost to borrow. Why the hell would I borrow if it's cost me 710%? That makes no sense whatsoever. Okay, so let's take a look at Nike. Nike, 74.59. That means 74.50. The closest one's going to be 75. It's going from 54 to 108. Okay, great. Unfortunately, we have 2 down days in a row, Friday and today. So even though I like the company, all right, here's your high and here's your low. Okay, last Friday, She had 3 days to the upside. Monday, Tuesday, Thursday. But Friday was down and today was down. So unfortunately, it's not that great this week. Now, I like it. Shorts are paying that. Yeah, I don't short anything. All right? Sorry. And T-Pet, never heard of them. T-P-E-T. That right? Yeah, T-Pet. Okay, well, a couple of things. Number one, no options. How do I make weekly cash flow on a company that has no options? Okay, no options, no thank you. No dividends, no thank you. This company at the moment was a high of 14, now it's at $1.04. That does not sound very good. You're not understanding. There's a short interest of 49% and 710% is the cost to borrow. You're absolutely 100% correct. I do not understand it. Okay, so I grew up in a time frame, 60s, 70s, and 80s. Okay, if it ain't broke, don't fix it. If it's working fine, stick with it. You find something that works, stick with it. You're talking about something I have no clue. You gave me the ticker symbol. Well, here it is right here. TPET, Trio Pete Corporation. No dividend. I mean, no options. Okay, no options. Well, how am I going to make money off of it? Okay, and no, I don't short stocks. I don't do that. All right, if it sounds like a hell no. It does sound like a hell no. I mean, think about it. If it doesn't make sense, all right. Remember I said, rule number one, if you don't understand it, don't do it. Well, I don't understand this, so I'm not going to do it. Gotcha? I have shares. Well, alrighty then. So I'm thinking to myself, if you have shares, all right, did you buy them in April when they were $2 and then they went up to 14? Or did you buy them when they're at 14 and now they're worth $1? So I have no idea where you jumped in. I have no idea where you jumped out. I have no idea what you're thinking of. I don't short stocks. I don't understand it. 103 is your average. Well, it's currently at 104. You made a penny. Okay, I don't do things I don't understand. That's my rule number one. If you don't understand it, don't do it. If you don't want to buy it and hold on to it for the rest of your life, don't do it. Well, when I say I want simple, safe, predictable, consistent, and no way to lose, well, I look at after hours. It's down 98% over the past 5 years. Okay? But I get you. Well, I'm glad you do. Okay? So my thought here is you're looking at lightning to strike. You're buying something and you're hoping that it shoots through the roof. Well, that's speculation. I'm 60 years old. I'm retired. I have no desire whatsoever for speculation. I'm not looking for capital appreciation. I'm not looking to buy it at $2 and have it go to 14. That's not what I'm looking for. I'm looking for safety, predictability, consistency, and I want to be able to sleep well at night. Okay? Many times I made stupid mistakes and I couldn't sleep for weeks. I lost $91,000 in a week once. Couldn't sleep for a week. Yeah, no thank you. I don't want to go through that again. They have an LOL with a deposit on Canadian-based oil company. Again, speculation. No desire whatsoever. Lindarella, I love Intel. However, we're 11:35. I turn into a pumpkin at 12, and I'm sure you guys don't want to see that. So, for those of you in the morning trading group, I'll see you in the morning. For all you rest, I'll see you tomorrow night. Letter of intent. Yeah, good luck with that one. So, seriously, no, dude, if that's what you're looking for, more power to you. I wish you the best. Seriously, I do. Okay? But it's not what I'm looking for. 86, thanks a lot, buddy. I will talk to you later. Thank you for sharing your knowledge with us. All double righty then. You guys have a great night, and we'll see you again tomorrow, because we all know that the sun'll come out tomorrow, wipe away the cobwebs and the sorrow, till there's none. Just thinking about tomorrow. Shut your damn computer off.